Okay, Japie, so let's start talking about car insurance. What have you got for us?
Car insurance, the boon of every client out there, because it's probably the insurance people get in contact with first. Whenever you go out and purchase a vehicle, you'll have the dealer ask you, is the vehicle insured? Because it's one of the requirements when financing a vehicle, when financing almost any item, but we get into contact with it much more when buying a vehicle. So to understand vehicle insurance, we have to understand first what exactly is it that is insured. And it's easy to say, oh, the car. But it's not just the car. It's also any standard accessories that are fitted to the vehicle. So if your car comes equipped with leather seats, that's automatically included. If your car comes automatically equipped with a tow bar, that is automatically included. But that's where the differentiating factor comes in. If your car did not come fitted with these accessories as a standard, then those items need to be specified. When insuring the vehicle, the insurance company will ask you for a description, year, make, model, and then they will determine a value of that vehicle. We'll talk about vehicle values a little later. But then you have to tell them, oh, I fitted mags additionally, I fitted a tow bar additionally, I added xenon headlights. All of those things which did not come fitted standard with the vehicle need to be insured more specifically.
Okay, so if you put mags on the car, you need to specify that you've put mags. What if the car comes with a standard set of mags and you added, you bought others and put them on? Then you have to specify that.
If it's aftermarket items, so if you go to one of the tire fitment centers and fit mags over there, yes, definitely they need to be specified. But I know a lot of your higher end vehicles, you basically go in and you buy a shell and then you start pick and choosing what you want and what you don't want. We always make a joke of some of the luxury vehicles. You buy the shell and maybe an engine, and then if you want a steering wheel, you actually have to pay for it.
Yeah, I have it extra.
Yeah, and you want a passenger seat. Yes, you have to pay for that too.
Yeah.
So all of those things that come fitted standard from your car dealer, that would be included.
Yes.
Although it's more specifically specified on your purchase agreement.
Okay, so what happens if you go buy a second-hand car that's already got these things fitted on? Then you still have to say, well, it is aftermarket. Therefore,
Correct.
It has to be specified, even though I did buy it from the dealer with these things already on.
Correct. It's always safer to rather tell the insurer, listen, I have got leather seats, I have got a tow bar, I've got whatever the case might be fitted. These days people don't usually change out radios in cars anymore, but a couple of years back when you bought a car you changed the radio and put in speakers. Those things need to be specified, and it's all about the replacement value, the actual financial loss to you. When vehicle manufacturers decide on vehicle names and models and numbers and so forth, that usually indicates whether the vehicle would come fitted standard with leather seats or a tow bar, for instance. When buying the second-hand vehicle and you give the description, that would be included in the price, because that was originally standard equipment. But always rather make certain with your insurer. The last thing you want to do is think your car is worth X and then only get paid out Y.
Yes. Yeah. Or one of those extras get damaged and then they say, well, that's not part of the cover because you've crashed or you've bumped your mag and now the mag is completely bent or something and now you can't replace it because it wasn't specified on your car. All right, guys, again, if you have any questions, give us a shout out. You're welcome to ask Japie any questions you might have. On the website there is a shout out button. Just press the shout out button and we will get that message almost immediately. Okay, so first that was what is insured. What is next?
Then we have to understand the whole concept of insurable interest. Now, we touched on this in earlier shows. Again, guys, please go and listen to the earlier shows. There's some very valuable information in there to help you better understand your short-term insurance contract. But insurable interest boils down to who is the person who is going to suffer a financial loss in the event of an insured event taking place. So, who is the person who's going to lose money? short and sweet. So insurable interest, specifically as it pertains to vehicles, would be who is the person in whose name the car is registered, not who's the driver, not who is paying who for using the vehicle.
Yes.
It's in whose name is the vehicle registered, because according to the short-term insurance contract, that's the person who has the insurable interest. Now, to better illustrate this, we have to understand the parties to most insurance contracts, and more specifically short-term insurance. We've got a couple of people. So we've got the person who is the policy owner. That's the person in whose name the physical policy is. So the policy is in the name of Lourens Oberholzer. Then we can go further, and with a vehicle we can have a owner. So the policy is in your name, but your wife is the owner of the vehicle. So then we have to say, this specific vehicle is registered in my wife's name. Okay. So now we've got two parties to the contract. And then we can also have a different driver. So the policy is in your name because the house and household contents and so forth belong to you. The vehicle is registered in your wife's name, but your son drives the car. So now we have another party attached. Who's the actual driver of the car?
The regular driver.
The regular driver of that vehicle. And lastly, the payer. So who's the person who pays it? Now, most times when we're referring to short-term insurance, it's not that complicated because the policy owner is usually the registered owner of the vehicle as well, and they tend to be the driver. Most of the times, if you're speaking about a wife, they are automatically included as a co-insured on the policy, so it's not necessarily, you don't necessarily have to specify her as being the registered owner of the vehicle. But again, it's always important to rather mention these things. Guys, I've said before, rather give your insurer or your financial advisor too much information than too little. Protect yourself.
Yeah, so make sure you've declared everything that is relevant.
Correct. And even things you don't think are relevant, declare it.
Yeah.
Because they will then decide what is relevant and what isn't relevant.
Yeah. And I think this is something we need to just chat about, because this is something we see quite often in the industry that we're in, where the child buys his first car and then the father says, no, it's going to be too expensive to have it on your personal name. Let's put your car on my policy. They then don't declare the child as the regular driver to get a lower...
even the insured owner.
Even the insured owner for a lower premium. And that can come back and bite you in the backside.
Because it creates problems on so many different levels. To expand on the problem you just explained, a lot of times mom or dad would insure the car and it's registered actually in one of the children's names, and it's kept on a separate premises.
Yes, yeah.
At the children's home instead of the mom and dad's home. So now the insurance company turns around and says, but hang on, you, Mr. Policy Owner, is not the person who's going to suffer the financial loss. It's going to be your son.
Yes.
But you never told us about it.
Yeah.
Further, you never told us where the car is kept overnight. So, yes, you stay in Sandton in your luxury home, but your son stays in somewhere else.
Now you must be very careful.
Yeah, stays somewhere else, which has a different risk associated to it. So we could not determine the premium correctly. We are now going to repudiate your claim for non-disclosure. Yeah. And there's a very big difference between repudiation for non-disclosure and declaring the policy null and void.
Yes.
Again, it gets a little bit technical, but in layman's terms, repudiating a claim means you paid for this, but you didn't give us all the information we needed, hence we're not going to pay your claim.
Yeah.
And you lose the money you paid. Sorry.
Yeah.
Declaring a policy void would mean they say, listen, we would not have underwritten this policy in the first place, so we'll give you all your premiums back.
Yeah. So we put ourselves and yourself back into the position you were
before
at the beginning.
Started.
Yes, because the contract doesn't exist anymore.
Yes.
So both parties have to be back where they were. The insurance company has no risk, and you have your premiums back.
You never paid a premium.
Yes.
Correct.
Yeah, which is not ideal.
No.
So the thing is, people do that and they sort of convince themselves and hope that they'll get away with it, instead of, you can just as well take those premiums and rather put it in a bank account somewhere and hope for the best, than do that knowing that you're going to probably have an insurable interest problem at the end of the day. So what is cheaper, and I don't know if you can off the top of your head have or get this answer, is it cheaper if I have my son's, not my son's car, it's my car, but my son is driving it, and I have him on as the nominated or the regular driver? Is it cheaper still that way than him having it on his own name and then being obviously his own policy, his own, he's the owner, the regular driver, etc., etc.? What is there a difference, or would they look at the driver and still load that premium?
Short-term insurance companies and all insurance companies always calculate the premium according to the highest possible risk. So in the example you used, the fact that your son is younger, he hasn't had his license that long, would have a massive influence on the premium, although it's on your policy.
And it's my car.
Correct. The premium for the item would be exactly the same as if your son insured it on his or your child insured it on his or her own.
Yeah.
Where the difference comes in is with the policy fee and with the potential advice or broker fee.
Yes.
Because that could make a difference. And also, insurance companies, especially short-term insurance companies, like to clump stuff together. So when you're insuring a vehicle alone, the item premium for the vehicle would be more expensive than insuring a vehicle with household contents and a building and some all risk and all of those types of things. So taking all of those things into account, to give you a short answer, it would be cheaper for your son to insure it on your policy, given that all the proper information was disclosed. Your son is nominated as the driver, the owner, and the determining factor usually there is, where is the vehicle kept overnight? If your son is still staying at home, then that's fine. Usually they would allow it. But as soon as somebody else is the owner of the vehicle, somebody else is the driver of the vehicle, and it's kept at different premises, then they start asking, but why are you insuring this?
But at the end of the day, if it's still registered in my name, I still have the right, as long as I make sure that the right information is there. The driver who drives the car is on there. I can't say, well, I'm the regular driver, and hope that if my son drives the car and he gets in an accident, they're still going to pay for it, because they might ask those questions. You might get away with it. I mean, we're also not saying that there aren't people that get away with it. But do I want to take that risk? So rather make sure these things are sorted out, make sure that the address is correct and all of those kind of things.